Welcome to another live edition, our second one of Risk and Return. I'm Charlie Gasparino here with my partner in crime, Bob Sloan of S3 Partners, the granddaddy of data. I want to get right into it, Bob, because we have a lot of ground to cover. We got some of my headlines to cover, which I'll have some breaking news for us about Trump and meeting with CEOs, Wall Street CEOs last night. But we can't. We got to start with the markets. I mean, let's say I think I'm being not too over the top by saying the markets crap the bed again today. But in any event, I'm going to read you what Charlie Brady of Fox Business said. Stocks dive on growth rate cut jitters. The S&P 500, NASDAQ down more than a percent, led by technology stocks slammed as investors await data-driven shutdown. Dow tumbled as well, after two straight record highs. Something's going on here. Why don't you unpack it for us? Because that's what we pay you the big bucks to do.
Yeah, well, first of all, how much did Larry Ellison lose today?
Well, that's funny you say that. Okay, so Larry Ellison, and we're going to get to that in my story that I'm going to talk about, but I've been tracking this. I've been I guess I'm not quite following him or stalking him, but because Larry Ellison's son is involved in a major purchase of Warner Brothers Discovery, and Larry Ellison, as we will talk about later, is going to backstop that purchase. That purchase could cost anywhere between $56 billion to $70 billion, which David Ellison doesn't have in his back pocket. He now runs Paramount Paramount Skydance just bought his small independent studio. Skydance just bought Paramount, which is a pretty big company. They released earnings. By the way, losses. No offense, they don't have the money. They have $3 billion in cash, $13 billion in debt. So he's got to have the old man. So I've been, backing him, which apparently he will. But I've been tracking his net worth, and it's declined. He's lost since September, when it reached its high of about $400 billion.
Go tell it on a mountain. Holy moly!
He's lost 130 cash. He's lost 130 billion of his net worth because most of it's in Oracle stock. As you know, the co-founder of Oracle, he's been very hesitant to sell over the years. If he sells, he buys a little more, does options and things like that, pay for tax purposes, living expenses. But this guy doesn't really sell. He owns 40% of the company, by the way, the largest single shareholder. A visionary of tech. We're not going to get into everything about Larry Ellison and his long career, a 40-year career. I think it began in 1977 at a small startup, right?
Amazing.
That's 40 years, 77 to now. That's about 40.
We'll call it 40.
Okay, but in any event, are we crying for Larry Ellison over that? He's still worth.
I don't think we're crying for anybody in this market. I don't think we're crying for anybody in this market. There's a lot of noise, a lot of chatter. The chattering classes have been rooting for this pullback because everybody wants to own the word crash, right? Everybody wants to say, I was the reporter that caused it, not caused it, but actually called it and got it right and all this nonsense.
What is with people thinking that 2007, 2008 is going to occur again?
There's a lot of it.
It's not.
No, I'm just saying there's a lot of that talk.
I know, it's like ridiculous. I get Lehman moments 5 gazillion times.
But here's the difference, okay? So fiber optic cables, this is like fiber optic. No, it's not. Those companies issued a lot of debt. Okay. Mm-hmm. Now, the companies that are the hyperscalers, they are spending a lot of money. Let's not sugarcoat that. But they're also making a lot of money. They're making a ton of money. So it's a question of opportunity cost. They are making a huge bet on AI. They're making
Oracle
a huge bet.
is extremely profitable.
It's extremely profitable. So
NVIDIA is extremely profitable.
And so they are making these big bets with corporate cash. Okay.
Right.
They make so much money in 3 to 5 years or whatever it is, they'll replenish it.
Right. This isn't a bubble in the sense, it is a bubble, but it's not in the sense of a bubble like tech, like we had in .coms, where literally
real businesses are backing this, not just investment capital.
Really like just BS backing in these companies with no profits, no revenues, no nothing.
Yeah.
Maybe a pipe dream, you know what I'm saying? Or weird investments, derivative of mortgage-backed securities that were highly leveraged to a market that was imploding fast.
So Michael Burry, right, of Sky and Capital, closes his fund. Now he's a very rich guy. He's going to manage.
Now Michael Burry, we should point out, was the
Big Short.
The Big Short, one of the guys.
One of the guys in the Big Short.
The
a lot of other people too.
Collapse, right?
Certainly uh, there were a number of people. I mean, Meredith Whitney called that, and he called it, and then it was
Stan Druckenmiller called it.
Stan Druckenmiller called
Goldman
it.
Sachs famously went short.
Yeah,
The firm.
also, and then I can't. I'm just blanking a little bit, but he works at Neuberger Berman right now. He called it, right? All those people were in the movie, but this is people are, I think, confusing levered capital and making the argument about depreciation,
right,
and that it's going to hurt earnings and so on. And so, yes, maybe the market got up ahead of itself, but the productivity gains and the ability to actually, I think, increase margins. Everybody's worried about a K economy because job openings are less, and you see, the market go up,
and AI taking jobs away.
And but the data that we have actually supports that momentum is still very much alive and well, and is coloring a lot of sectors within the marketplace. So, I just think it's one of these things. The market's been so red hot. It's actually healthy to have a pullback, get some digestion, set a new level, and let's move on from there.
And what do you have when? This is a stupid question, but you got to ask it. Like, when does it end, or does it end?
Soon. If the market pulls back 6, 7, 8, 10%, is that the worst thing in the world given what's happened?
That would be a great thing to happen, my view, because that would be the digestion you need.
I think so too.
I mean, it was way overdone, as and by the way, people will be going nuts if that happens. 10% correction in the market, people will go nuts, but it's not.
You're already you're kind of like 5-ish.
It's not the end of the world. Right? I think there's worse problems with this economy that we'll get into later, vis-a-vis the White House meeting with CEOs that infects not the Wall Street economy, but Main Street, which sometimes bleeds over to Wall Street. But we'll save that for later for my headlines. Let's get to your stuff, your actionable calls. You got a bunch of stuff, and this is what people pay the big bucks to hear.
Yeah. So remember, these are data-driven calls. We're not telling you when to buy it or where to buy it, but this is what our data signals as being things that we see as moving, and that's what our data is to do, is to identify those stocks where the action is. Where the active longs and shorts
actionable. That's why we call it actionable calls, right?
Actionable calls, and that can mean a lot of different things to a lot of different people. That can mean, hey, we think you should bet your money on these stocks. We're just saying this is what the data says. It's pretty interesting. It has a high percentage of being right. So last week we had an up week. Last week we had Becton Dixon up, which it was up about 60 bips. We had Monster Beverage, we said down. That was wrong. And then we also said that we had Microchip Technologies. We had a bearish call on that. That was correct. Those two calls between Monster and Microchip cancel each other out. So we had an up week of about 60 bips. This week, we have a couple of things in a biopharmaceutical and medical device sector. We have Scholar Rock Holding Corp. They report Friday morning. We have a bearish call on that. And Medtronic, which is a medical device manufacturer, we are bullish on that stock.
Okay.
And those earnings come out next Tuesday morning.
We have symbols for those.
We do.
People want symbols.
Don't
ask me why, but
SRR. so we're bearish on SRRK.
Okay.
And we are bullish on MDT.
All right.
So that's what we got. One of the things that we've been following is we started at the top of the show is momentum market, right? And we keep track of.
Let's unpack a momentum market. Every trader knows what a momentum stock is.
Right.
What do you just for people, because we do try to educate, bring new viewers in, and sometimes we talk over them a little bit. But what is exactly momentum investing?
It's chasing. It's just chasing price action.
Forget about the fundamentals and
it's chasing the flows. Where is the money moving?
Chase your tail a little bit sometimes.
Well, sometimes, but you're chasing where the money is moving.
Okay.
And trying to figure out where the flow of money is going, and then chasing that flow of money. That is I think the true.
So you're less concerned about profits, losses, EBITDA. You're more concerned about that.
What's moving, and will it keep moving? So that's what That's what we got to kind of figure out, right? It's like, will things keep moving? So,
and you see sectors moving as opposed to like tech, obviously. Is not one of those.
We see those things moving. I'm just going to hold this for this show. How about that? We'll just do things on the fly when
I'm
it's live.
sorry.
You know, things happen.
We're gonna get that. We're gonna get our technical difficulties under.
Yeah, well, it's all right. So it looks good this way. But so
yeah, you look like you look a little bit like Edward R. Murrow with the mic in your hand.
Speaking from the rooftop in London, bombs are falling.
It is, with the markets getting crushed today. the bombs are falling.
So, but that's the definition of momentum. And so, when you look at our battleground framework, you can actually clearly figure these things out, and you can see the chart. And so, what's interesting to us is that the number of battleground stocks, and the way we define that is, it's the number of active longs, more or less equaling the short interest. Right. And that's telling you that there's two forces going at it every single day. There's going to be volatility in those situations coming up. And so the number of those situations is actually going up quite a bit. They were 80 in January. Now we're almost at an all-time high of 119. Now, the value of those battleground stocks is actually a little less. It's down from its high of $68 billion, was $57 billion. It's $57 billion today. So you're seeing, it's like going into, I'd say, if you were going into a casino and you saw one hot table, now there's like 3 or 4. And because there's a lot of action and there's a lot of money being parlayed against each other, right? So 2 of the names that really stand out as battleground stocks, and we've talked about them on the show. One is Circle, which is a $23 billion stablecoin issuer, right? And it has about $2 billion each way, long and short. So that there's going to be some kind of, in the next 60 to 90 days, you're going to see some kind of movement in that stock, up or down. And then also Rigetti, which is a fascinating company, is a $10 billion quantum computing stock. And so, believe it or not, if I asked you, what do you think the market cap of the company is when the revenue is $2 million, or projected revenue is $2 million? What do you think?
I don't know, 0, close to it.
How about $10 billion?
That's amazing.
Yeah. So
by the way, does that sound stupid? Me saying 0? No, right? Because that's
no. But it was an either or question, right? So,
but it's not like, this is not a company that you would think was as a high market cap, right? I mean,
clearly not. But it shows you the amount of, I would say, the amount of expectation that is built up into these quantum stocks, right? So it's a real thing. And so now you have about, I'd say, $1 billion on each side betting against each other. Uh-huh. So those 2 stocks are really good examples. Circle, which is CRCL, to your point about symbols. See, right. we do learn, we do learn things. And then there's Rigetti, which is RGTI, Rigetti Computing. Those are 2 examples of battleground stocks where longs and shorts are fighting it out. And that's where the action is.
And were we looking at them for next week? What do you got on them?
Well, we don't know. I mean, it's just to identify where bets are being placed, and that's where short interest comes in, and see what happens when short interest goes.
So right
up
now,
or
you
down.
can't make a determination on that. Your data.
It's equal. It's a standoff.
Yeah, it's a Mexican standoff.
It's a Mexican standoff. So, what happens? Let's say next week, if one of these stocks would come in and you have $100 million worth of short interest, so you've got more shorts than longs. Shorts are winning. Does that go like this?
Yeah. When will we know that? I mean, when could you trade that?
You could watch it every day.
So keep those on your radar screen.
Absolutely.
Okay. We gave you the symbols.
Yeah, we did. The next one is kind of interesting too, is IREN, which is it shows you how momentum is. There are 2 stocks really. There's Teradyne and then there's IREN. How momentum and AI is coloring everything. So this stock is up about 500%. The symbol is IREN. It has a market cap of about $16 billion. The year-to-date price change is up about 500%, so it's up 5 times. The short interest is now up 288% over the year.
Jesus.
Yeah, and so the short interest doubled to about 20% of the float. You see traders shorting into the strength of the stock, and there's a very squeezable situation going on with this stock here. You got a lot of people thinking why is an AI crypto energy play an AI play? This is
Well,
it's
if
a
it's
data
ener
center.
if
But
if
it's a data center that blending AI, cloud, and crypto. How is this an AI play? It's either
it
a data center
it
play,
should be energy could be an AI play, couldn't it?
but it's tangential to the actual technology,
Okay.
right? So, and that's the point, is that all these adjacent things are driving AI-like return in a lot of stocks that are just not AI.
You see, that does remind me. I know we said before that it's not what we don't have is 2000 Nasdaq crash sort of symptoms, or it's hard to make that analogy. That's like the Nasdaq crash, but I remember covering that. I was at the Wall Street Journal at the time, where anybody could just throw a .com at the end of their name, Martha Stewart omnimedia.com, and get a .com valuation. So there are some parallels here.
There are, and that's what we're trying to point out, is that momentum is coloring the price action of a lot of these stocks. So you look at TER, which is Teradyne Inc., and what that is actually a chip tester. It's not actually a semiconductor maker. They test the chips and their speed and capacity and so on. And if you look at what's happening in this stock, stock's up 41% for the year. The short interest change is about 32% up for the year.
Oh my God.
Yeah. And you're seeing, again, another potential short squeeze situation. Short interest, and you see it on the screen here, rising pretty dramatically into the strength of the stock, because people are saying, hey, this is not really a technology play per se. It does what it does, but people are chasing AI, and you can see it here. So that is where momentum is spilling out over the marketplace. But interestingly enough, we're talked about hot sectors where AI is actually, people are chasing that. What about things that are neglected?
Oh,
so what's the most neglected sector of the marketplace right now?
consumer staples. I have no idea.
You're pretty close, actually.
Really? That's bizarre. That I actually got something right for a change. But anyway, go ahead.
Energy.
It's a consumer good.
Consumer good. Right? So we looked at the XLE, which is the energy select sector spider, and we looked at USO, which is the United States Oil Fund. Okay, and the United States Oil Fund is a play on the commodity, right, and the XLE is basically on the entire sector itself. There's just money leaving these things all over the place.
I need to take a quick break. Be right back.
Okay.
I got an editor on the phone, so I might be breaking some news in a second.
Okay.
Just give me a second, okay?
Yeah, I'll keep talking. So what we've seen is that the short interest in USO, which is the actual commodity, is climbing. It's now 36% of shares. So people are bearish on oil itself, which is interesting, right? You had momentum. We talked about Teradyne. We talked about where these stocks, where momentum is actually influencing the basic business and coloring it into an AI way. This is just the opposite. It's saying, hey, you know what? At $60 a barrel, $65 a barrel, oil, we're bearish on the price of oil. So it's a very conflicting signal. And you're seeing outflows in the XLE, which is the energy select sector spider. So investors are starting to walk away from this particular sector. And that makes it a really interesting contrast to momentum, right? In a momentum market, capital chases what's working, right? And that's the definition of momentum. It chases the money flow. Energy isn't working. And the flows confirm that. And if you're looking at our data, you would see that. So, we saw the same analysis last month on the Russell 1000 that showed the energy, was the only sector with declining long and short interest since Q3. So this is something to take, to keep an eye on as the debate rages about the Fed and what they're going to do, and what's happening with the energy XLE here. I think is a pretty interesting contrast.
All right, I'm back. And by the way, I can't say who called me, just so you know, but let's just say major Wall Street CEO that I had to take the call, and we're going to have some breaking news in a minute about it.
Okay. And then lastly, we're going to talk about is Xiaomi. Now, we like to talk about Hong Kong stocks because we like to talk about the influence of China on this show. We think it's more and more relevant, clearly, to America's economic condition and future.
And the trade stuff is starting to like even out a little bit here, right?
It's so episodic. You don't really follow these things, go front page and then they retreat, but there's obviously conversations happening in the background. And I think maybe both sides understand. And the reason why we talked about Xiaomi, Xiaomi is the Apple of China, right? They make all the phones for for China. And it's probably, I would say, the biggest hedge fund consensus short around.
Really?
Yeah. And so,
is this a Chano special?
No, I don't know if it's it might be. He hasn't said anything about it because we watched that pretty closely. But this is what happens where there's momentum and active capital invested on both sides, but the momentum is pointing downward. Right.
Oh, interesting.
So if you look at our chart here, you can see how the short interest is going through the roof.
Yeah.
And you see the price dipping. And what is this telling you? It's telling you that two things have happened here. One is that the 50-day moving average has slid below the 200 daily moving average. And usually that's a death cross. It's like the ultimate bearish sign, technically, for a particular stock.
That's a death cross.
No, that's short interest versus price.
Okay.
But when you see the 50-day and 200, when you see the 50-day average go below the 200-day moving average,
okay, gotcha.
Usually that's a bad sign for the stock.
I was going to say that chart looks like a death cross there.
Well, interestingly, so you've seen a lot of conviction on the short side. And what are they saying? Consumers in China, there's a lot of deflationary fears. There's a lot of talk about real estate losses. There's a lot of talk about bad economy. What are people going to stop buying? Phones.
Interesting.
So that's why we're talking about momentum can color certain stocks, can say a lot about energy, which it does, but also keep your eye on Xiaomi. 1810 is the ticker, 1810 in Hong Kong.
And I would say it's one of those barometers that I'm pretty sure someone like Scott Bessent would pay attention to now, because as part of their negotiations with Xi, with the President Xi, and why they think they have somewhat of an upper hand is that their economy is hurting. Yeah. And the consumer is starting to like get crushed there.
Yeah.
Obviously the flip side of that argument is that, the Chinese can withstand a lot of pain. They don't have elections, so there's no political recourse.
Right.
And so just remember, that stock is an interesting political bellwether, I would say.
No, I totally agree. So that's what we had this week, Charlie. That's what we got.
Excellent job. Let me give you some headlines. The aforementioned CEO that called me. This CEO was in the meeting last night with the White House and Trump. Trump had an interesting meeting. He invited about a dozen CEOs. Adina Friedman was there from NASDAQ. Larry Fink was there from BlackRock. Jamie Dimon was there. They were, you name it, they were there. Steve Schwartzman. And the backdrop to it was fascinating because
so no one was there.
Yeah, no one was there. I wasn't there. But anyway, so they thought there would be some sort of press briefing, and there wasn't. People assumed, a lot of the people in the meeting, it was because of the more Trump-related Epstein emails, which I think are much ado about nothing, but they got a lot of headlines. The White House tells me that's not the case. They just didn't have time. There was a government shutdown that's ending, and so they needed to do other stuff. Take it for what it's worth, because I did ask the White House about that. What I was told is that obviously the markets are always an issue. Trump grades himself on the markets. The markets are very tenuous right now, as we know. But what's more tenuous is, and this is kind of what the sort of undercurrent of the meeting was the Main Street economy. That is there an affordability crisis? Now, Trump never uses the word affordability crisis. He's actually said it's a Democratic con job to call it that. But he did talk to the CEOs. How can we make things more affordable? I mean, how, and one of the, and basically prodding them to think of ways to get average people involved in markets to, put their money in something that over, 20 years is going to appreciate much more than a bank account. And so they were talking about that, obviously opening up the private market to retail investing, this whole private investing market where pre-IPO shares do trade. People make a lot of money on that stuff. A friend of mine had a whole brokerage firm based on that stuff. So that kind of captivated the conversation. And the subcurrent, the sub theme of all this was that Trump is starting to admit there is an affordability crisis, or he's seeing where it is. Now he'll say, well, it's because Jerome Powell doesn't want to cut interest rates and people can't afford to buy homes. But as you know, his people are much more direct behind the scenes. They know we have persistent inflation. We have, we could have an economic slowdown. AI is starting to take a chunk out of jobs. And so there are issues here. And for the Main Street economy, that could be much more politically damaging to the Republicans than just losing a couple of governorships and having Zohran Mamdani be mayor of New York City. Like, we have a midterm coming up. The House is probably, as of now, is toast. The Senate, they'll probably hold on, but you never know if things get really bad. So there is a little bit of freak out on the side on the economic advisors, as I was just told by someone who was there, and I've been waiting for his call all day. By the way, get back to me sooner, guy. You just have a firm to run. I gotta do this podcast with Bob Sloan. Well, hopefully we'll get him on one of these days.
By the way, that was a lot of very dramatic. That was very dramatic.
Which one?
I gotta say.
Which part?
Hold on, I got scoop. I gotta leave the set.
I'm used to doing that.
And I just carried on being my very calm and cool self.
That's you. You are calm and cool.
Very calm.
But during the financial crisis, this is funny. When I was on CNBC, you would see me on the phone in an 8-box calling sources. You would see David Faber on the phone.
Everybody was on their phone.
And we were literally doing live reporting, on-air reporting. You know what I'm saying?
Yeah.
And texting and whatever back then on our Blackberries, and there was such thing as a Blackberry. So it's part of when you do live TV. You gotta roll with the punches, right? Stuff happens and you break in, you move.
That's it.
And so that's what we're gonna bring. We're gonna bring, with risk and return, particularly as we go live now, much more spontaneity to this programming, because that's what I'm kind of good at. That's what you're really good at. And so we're just going to let our freak flag rise. Let it rip.
Let it fly.
So that's one thing I got, and it was, and to me, that's kind of a concession on the White House's part.
It's a big concession.
Yeah. Let's let that play out a little bit, because we're starting to see the notion of an affordability crisis not just become a Democratic talking point, because they're using that against Trump. Trump has called it a con job. But I was listening to Steve Bannon talk about it, and he actually mentioned me on his podcast about my worries about inflation, a persistent 3%. And so MAGA is out there really worried about this. So again, this is a political issue. It's an economic issue. I'm not sure how that sort of meshes with the markets. At some point it might. Yeah. Markets could trade up on inflation, just so you know, and have. If tariffs cause stagflation, then it's a whole other story. You know what I'm saying?
We're not here to make market calls. We're here to tell you. We're here to tell you what the data tells us. But there is a clear split, and this is why we highlighted like Xiaomi, and we highlighted Teradyne. We highlighted a lot of stocks where momentum is chasing an adjacent industry that happens to be sort of kind of involved in AI, and it's just moving with it. But then you see other sectors like energy, where money is it's a dead sector. The money is not involved. Matter of fact, money is leaving it. We talked about gold miner stocks. Money's leaving.
Why is money leaving energy? Because of drill, baby, drill?
Well, if you're really thinking the economy is
okay, the
slow,
flip side of that, yeah.
And you think oil is going to drop to 40, you leave the sector.
A combination of a slowing economy and increased drilling and
a slowing economy for sure,
and increased supply.
That's right.
I'll take that.
Yeah, I mean, but if it's a double-edged sword. Oil falls, well, then it makes it much more likely that inflation comes down to something closer to 2%. Right?
Hopefully.
Hopefully. Right? But then what does that mean? It means that people are very bearish on the economy. So, you got to be. They may feel better about the value of the money they have. They just may have less of it, right? Because the 401ks will be down at that point.
All right, let me get to, before we wrap things up, why I care about Larry Ellison's net worth so much. It's gone from over 400 billion to, as I just checked, 267 billion. That's 130 billion decline. His net worth, from what I'm reporting this in the New York Post kind of imminently, he's going to be the backstop. He's agreed to be the backstop now for his kid's bid on his kid, meaning David Ellison, for Warner Bros. Discovery, as David Zasloff, the CEO of WBD, shops the company. He's got some interest from Comcast, got some interest from Netflix. Nobody's put in an official bid yet. Only David Ellison has a bid of $23.50, so a $56 billion.
Why do we care so much about the restacking of media? Why is this? Why is this an important story?
It is an important story because media is still, these are
still king. I mean,
this is still like a cult. I mean, this is still like sort of culturally important institutions, but they are declining businesses. And it's fascinating. You mentioning that is exactly what Rich Greenfield, who is the axe of the media analysts at Lightshed Partners, he said something to the effect of, it's in my story, but I'm paraphrasing a little bit, but not much. Why are the Ellisons going to blow like all this money on a declining asset, which in its current state, Warner Bros. Discovery is a very good company in the sense that number 1 studio, number 3 streamer, so it's coming back. It's got HBO, it's got CNN. Why? I mean, we're talking about tens of billions of dollars here. And, at first I couldn't really answer it, but here is what I think they're playing a long game. And remember, Larry Ellison didn't get to where he was for being stupid, and not being a visionary, right? Sun Microsystems, remember when they did that deal?
Oh, yeah.
2010? Everybody thought it was horrible, blah, blah, blah. And he got right into the cloud computing business. And that's helped him. That was his entree into cloud computing, which is why Oracle is Oracle of today. And that's Larry Ellison's vision. I think what they see in Warner Bros. Discovery is a huge library, not just of movies, but of content like Harry Potter, of Sopranos on HBO, and all this, I don't know, whatever they have, Sex in the City. They got a ton of stuff that I watched for years. I don't watch TV as much anymore. And they're going to AI it. They're going to produce content with AI. James Gandolfini tragically died of, I believe, a heart attack years ago. He was Tony Soprano's, The Sopranos. Well, can you, with his image?
But is there an AI David Chase? Is that possible?
Well, it might be David Ellison. I don't know. He's smart like that.
David Chase is invented a genre, right?
Yeah, but HBO owns the content,
right?
And can you AI that stuff? Can you create something from that content without James Gandolfini being alive? I don't know. But that's kind of what we're talking about here. So they see that opening. Now, will they pay what Zasloff wants? Zasloff wants to see a 3 on their bid. 30. A $30 billion bid would be something about $72 billion. A lot of people say that's pie in the sky, but if he can get, Brian Roberts at Comcast kind of needs the deal, given his need for content. Netflix is Netflix, but it would love to buy the studio so it doesn't have to build one as they become this sort of all things streaming. So there could be a bidding war here. And and the question is, will Larry Ellison use his net worth to backstop? I don't think he'll. My guess is he won't. Just based on what I hear, just write a check. Although he could. Elon.
Well, he could get it financed too. By the way,
he can use his.
He could use his own balance sheet to go.
Right, but he can use his stock as
collateral
to borrow. So that's kind of like what a lot of people think he'll do. And so that's why I've been checking his net worth. I mean, it would be fascinating if he does pony up, if he does that. In this sense, it would be him saying that there is, in my view, a rationale for media content in the new economy, that it can be used. It might not be in the way that creative types like I like. It would be disintermediating us by taking what's already out there and AIing it to the point where you have new content with AI.
Yeah.
And I think that's kind of where he's going with this. We'll see. Watch this situation. It's going to play out. Story's going to break tonight or tomorrow. I can't remember, but I'm actually bringing it to you first here on Risk and Return.
Live phone calls, live calls. That's what a live show is all about.
Do we have any comments? I don't mean trolls, but comments.
Any questions?
Any questions? You can comment too. Oh, what a bunch of losers. No, I'm only kidding. I don't mean calling our viewers losers.
Well, now I get a question.
Now we get a comment. Well, that's it for me, Bob. That was a wonderful show.
That's all we got this week. Always a pleasure to do a show with you. We just never know what's going to happen.
Well, I mean, this is
calls coming in from top CEOs around the world, right here live on X.
And by the way, we provided to you, the viewer,
just because we are two really, really great guys that want to provide information and make sure everybody's really well informed.
It is our duty to make sure that happens.
Absolutely.
Again, this is Charlie Gasparino wrapping up another riveting edition of Risk and Return with my partner, Bob Sloan. See you next week live, by the way.